Adam and Levine from the Learn, Invest, Grow show. We are so happy to finally come back on live. It's been a while, and we have a special guest, Kevin Kim from Geraci. He is awesome. And basically what happened was the reason why we took a break is because my partner Tei's not here right now because he's working on some important matters with closings of loans. But basically we launched a new debt fund, a new platform to focus on business purpose loans. And for real estate investors, typical loans are like fix and flip, a long-term rental loan, a DSCR. And what's interesting is that my partner Tei, he's on listening to podcasts, webinars, and heard Kevin somewhere, and it was like perfect timing because we actually wanted to engage with a law firm to help us put together our private placement memorandum. So what is a private placement memorandum? That's basically I'll let you explain it better. but that's a way for us to legally be able to raise money from accredited investors, and we want to do things the proper way. But not only that, we didn't just want any securities attorney. We wanted an attorney that specializes in private lending and give us the guidance, because we're dealing with a lot of third parties with our business models to buy, close a loan and trade it to an investor. And Kevin has a lot of this is all he specializes in. So we wanted the right partner to help us. And Kevin, I'll let you introduce yourself. Thank you.
Yeah, thanks for having me on. I mean, one of the things you mentioned that is very true. Like Geraci, we were founded in 2007, and when Anthony founded the firm, he was writing mortgage funds at another law firm, and then started his own firm here in California. And then probably in 2010ish, we started expanding nationwide. And when we met, we had just been on the tail end of a big marketing push to break into the East Coast. And what we love about it is that what we find is there's a lot of attorneys out there who do, who write loan documents here and there, or have some security experience for general businesses raising money, right? But what we found was after we finished our kind of national marketing push, we discovered there's not a lot of law firms that really exclusively focus on this business, right? And it's a growing business, right? And so we were really excited to find that out, because before we did that big marketing push in 2012ish, we started that marketing push. We decided ourselves, like, this is what we're going to focus on. Like, the firm is going to be dedicated to this particular industry and this alone. Like, we're not going to be working with conventional. We're not going to be doing a ton of agency stuff. Like, we're going to service this industry, and we became very niche experts in this industry. And me being a securities attorney, like, my area of expertise is focused on this industry. Like, I have a little bit of real estate clientele, but most, like, that's small compared to the list of clients that we have that are private lenders who are either raising money through a fund or doing other types of capital raising in the market, whether it be institutional or high net worth investors or crowdfunding or fintech, all types of different strategies, but ultimately boiling down to making these business purpose loans across the country. And I'm really excited to be part of this industry because it's growing, man. I mean, it's on fire, and I love being part of these stories, because what's great is that we've seen so many lenders, start, and have, their friends and family raise finished, and then really just kind of go out there and kill it. And now those same companies are, managing, I don't know, somewhere close to $500 million under management, $2 billion and $3 billion in origination. It's awesome to see, right? And so there's definitely a lot of runway in this industry, and it's just really cool to be part of that story. So.
Yeah, 100%. And that's interesting because, that's how it started out with my father, for example. I probably explained the story many, many times, but he has been investing for over 2 decades. He's a retired dentist. And the reason why he was able to stay retired is because of his real estate investments.
Right.
Got multiple cycles, the stock market, it's a crapshoot. But what's interesting is that we discovered it was about like a decade ago that there's liquidity in this market.
Yes.
And it's like, it was fascinating. I was like, wow. So we don't have to hold on to a loan to maturity or wait for the loan to, for the refinance.
And that's a new development. It didn't used to be that way, which is great. I mean, it adds even more tools to the investor, right?
Correct.
Awesome.
Yeah. So then again, like what happened was, is like, we saw that there's liquidity. We're able to transfer risk. We're able to recycle capital over and over again. But then again, like what ended up happening was, I ended up creating a company with a few partners, basically just brokering loans to a shop that you're very well aware of. We were taking loans, and then we wanted to get to the next level. I wanted to really help my father and help some other investors. And Tei came along, and if Tei was here, we'd tell the story. Basically, he worked at Goldman. He's a CFA, CPA, and focused on corporate debt. But I knew that he's the right partner because he could help get us to the next level, because that's all he does. He deals with numbers. There's a lot of attention to detail, but then we're like, okay, we need the right partners in place. So as we're doing this, all right, you know what? Like we dealt with other attorneys in the past, but we're just so thankful that you helped us put together this private placement. It wasn't like a simple process. I mean, I know you gave us a lot of your time. I mean, we must have spent, I don't know, like a while.
Yeah. But the nice part about these projects is because we've done so many of them over the years, like, and it's kind of funny because the idea of this, evergreen debt fund strategy is kind of a foreign concept. It was a foreign concept back in 2007, and today it's kind of a mainstay, right? Everyone pursues, typically at least the ones we do are usually open-ended debt funds, and being part of that kind of, I guess the story to craft a structure and be known for that structure and be known for that strategy has done well for our business, but it's also been allowed us to really kind of meditate on the idea of like, how do we make this thing even more effective, more efficient, more powerful for investors, right? Because at the end of the day, these balance sheet funds are fantastic investments, and how do we make them even more beneficial? And over the years, we've added different features and gone with different, consulted with tax people and tried to make it even more effective. And lately, what we've been, we've seen a trend in is, for investors who are complaining about, oh man, the yields are compressing because the market's very competitive, right? Oh man, yield compression. It's true, right? And we've been consulting with clients with how do we manage that and how do we work towards enhancing that yield or increasing the returns or so on and so forth. So it's been really cool to be part of not just the legal side. We can write, any attorney can write docs. It's really consulting and advising through the legal process, but also consulting and advising the business process and walking through the industry and like kind of thinking about what is your strategy. You guys are, your model includes a secondary, liquidity strategy, and that's one of the moves that we've been consulting with clients. We help model it out and make sure from a tax standpoint it's not going to be too detrimental to be able to fund loans and sell them. And if they sell at a premium, right, and there's additional volume, how do we pass that benefit off to the investors, right? And so, and that's been very lucrative for everybody. And thinking about balancing this type of strategy with the robust institutional strategies out there, and also kind of hedging for a potential down cycle, and building not just like one vehicle for the client, but working with them to figure out. Let's look at the organizational chart as a whole. And let's think about strategies today, but also strategies for 3 years from now. I typically don't plan beyond that with clients, but like 3 years from now, let's figure out where we're going to be at, how we're going to be set up, so we can make sure that this business is going to be doing this 20 years from now, right? So that kind of stuff I love doing. It's not something you normally get to do as an attorney, and it's the fun part of the business, right? Because you get to build that relationship, and we became friends. We had drinks and cigars in Vegas after all that, after finishing that. And that's the part of the business that I love. Right. And so, and hearing from you about like, not just the legal and the business side of things, but also kind of the personal story behind it informs our understanding of how you're likely to approach the business. And that allows us to take the service to a whole other level. Right. So that's kind of the, I think it's a really great time to be involved in the space because of our, I guess, almost obsession with the industry as a law firm, and so And so it's been great past few years, and with work with clients like yourself and others out there, and really kind of be an integral part of their story, which is awesome. So
Yeah, what's interesting is that I remember when we first started. So this business model, it's not simple to explain to investors.
right,
And I remember I said, hey Kevin, because number one, like we want to make sure we have a reputable law firm, right? Because we're speaking with investors, and it's very important. Like we don't want just some Joe Schmo. Like we want
right,
someone that's reputable. And I remember like, okay, well, we asked you, it's like, hey, can you help us explain to our investors, like my father, and a few other friends of the family, this business model? And you actually took the time out of your day to do that. And it was awesome. And I was like, wow, thank you. That is actually a tremendous service. And then my father, he invested. There's
right.
other investors on there.
It's such a weird concept, right?
Yeah.
I mean, and we've had to do that over the years. I mean, we even seasoned veterans, like we know plenty of investors who've been investing directly into mortgages for 20, 30 years, have had to have that call. We've had clients who've never invested in this industry have had that call. I think the reason for that is that same concept we're talking about. Like, it's that obsession with the industry and obsession with serving the industry, and where I view it as I want to be part of that story where I can help, not just legally. I mean, if I'm just helping you legally, then I'm just like any other lawyer, right? So, how do we make that difference, right? And it's kind of funny. One of our clients shot this commercial for their business, like experience the difference. That's true. Like you want to differentiate yourself, and one of the ways we differentiate ourselves is try to add that value outside of legal services. But to talk to your investors who are listening to your show, like, it's one of the things that everyone knows about real estate investing, right? Everyone knows about that. It's everywhere. It's on TV. And what's fascinating to me is like, you see a lot of these folks like trying to get their hands on, their first flip, or, want to invest in rental properties. And that's great. I'm no problem with that. But there's just no inventory to do that right now. It's so hard to do that right now. And that's the proof of that is the volume of 1031 money out there, and the volume of DST investing out there, because there are no direct investments to go into. But if you think about it, like, this industry is a perfect hedge to any kind of growth investment strategy. And I always talk to our investment advisors that love this industry, and I talk to them about this industry. And I ask them, like, well, how do you pitch your investors? How do you talk to them about this space? And they have to educate. And one of the biggest education components is they treat this, the way they think about this industry is it's a high yield fixed income strategy. And if you think of it like that, then the lights come on, right? Everyone knows about fixed income. Everyone wants that passive income, right? That's why they invest in multifamily. And to tell me that you're going to get, like, even the lowest performing markets at a 7% coupon every month, like clockwork, and it's secured by a first position mortgage, a series of first position mortgages at 65, 75% LTV, not 80, not 90, right? You're talking pretty good numbers from an investment and a risk standpoint. So all in all, like, it just makes a ton of sense. And it's been, I got head scratching from my perspective. Like, Wall Street knows this. They've known this for 10, 15 years now. And it's kind of funny to me that, like, there are still high net worth investors to this day that don't understand that this is a great investment. And think about it, that Wall Street investors are coming in and they're accepting probably, I don't know, like a 3% or 4% return. If you think about it, if they're everything involved, right? When it comes to these retail funds that are managed and operated by companies like yourself, they're going direct to the asset. They're going direct to the originator, right? Something that these Wall Street folks dream of. I mean, if you look at their activity, they're buying retail origination companies because they want access. Well, and that's the funniest part to me is, like, if you are a high net worth investor and you have some insight into what's going on in our industry, you jump in head first because, wait a minute, Wall Street's investing in in these retail operations because they want more deal flow. I have direct access to deal flow through these funds, and I'm going to get a way better return than Wall Street will ever get. Plus, I've got a personal relationship with the sponsor. What's not like, right? So, I mean, there's so much opportunity from that perspective. And I think that if investors can get their heads wrapped around that, and they see like there's a reason why Wall Street and institutional investors have jumped headfirst into this space, and there's some legitimate it makes legitimate sense. Once that light clicks, they start allocating to the industry, and some of them even start their own businesses, right? And we've seen that a million times. A lot of folks start out as investors in mortgages and in funds, and they say, wait, I can do this myself. And then lo and behold, their client. So, that long way of saying, like, for your investors out there, they really should really seriously think about this industry. And I'm a big advocate of investing in these funds because it's one of the best fixed income moves that you can make. So
yeah. That's actually really interesting because a lot of people, like for my father or other investors, we could save this for maybe another episode, but my concern is, like, my purpose is I want to help people because I've seen a lot of bad actors out there.
Oh yeah.
My father being a retired, that doesn't mean he's like the avatar. Every investor wants to go after.
Every sponsor is going after the dentist, the lawyers, the doctors, right? Yeah.
And I see these pitches, and I'm like, and then there's a lot of people out there to look at, and they're on Facebook or whatever looking for private money, and I'm thinking to myself, well, because they number one, they have zero skin.
Yeah.
They have no money of their own. Maybe and they want 100.
And that's a really key thing to look for your investors to think about. If you're looking at a private exempt investment, that's what I lived. My life is built doing those things. My living is made building those things, right? But the key thing is the sponsor invested in his own product, and a lot of them aren't, and that's a big red flag because ultimately, what does that boil down to? They don't believe in their product. They can't put their money where their mouth is, right? And like personally, I would tell an investor, first question you ask is, second question. First question is, what's the return? Second question is, are you invested in this thing? And that's a real big one.
Yeah, and to answer your question, we are.
Of course you are. Yeah, we talk about that. Yeah.
Because this is, and what's interesting is this kind of sparked the idea with everything going on. I became obsessed about what's going on and then we figured it out. And keep in mind, like, for those investors out there that are private investors, like my father, like, it's not something like you could just fund a loan and trade it. It doesn't work like that.
Yeah.
You have to sign something called a master loan purchase agreement.
Right.
The whole vetting process. You need insurance. You need to have the right systems and processes, and it's not like boom, you're done and you're in. So just keep that in mind. So a lot of times, like, to have exposure, it's good to learn. Like, that's how I got involved. I learned from another lender. We participated in loans with them, and that's how we got involved. So like, if it's us or someone else, like, you could learn a lot, and then maybe you open up your own shop. But keep in mind, it's a lot of work. It's not.
Yeah, and that's a key feature. Right? I always tell clients, like, investor clients, like, if you're interested in this as I want to learn the business and try to and build my own, and you're kind of doing this as a means to educate yourself, I would actually invest either make direct investments into mortgages, acquire them, or fund parts of them, co-lend, participations, do that kind of strategy. Because if you go into a fund, it's really, you're not going to get much education, right? Funds are meant for, it's really more of a passive play. Yeah. And it's really a fixed income play, right? So I don't encourage people who are thinking about, like, learning the business. But a lot of folks who fund those direct loans think like, oh yeah, I could do what XYZ company is doing and negotiate an MLPA with whatever aggregator, right? And they have, right? And some of them are willing to, but they get to that stage and they realize, wow, this is a lot of not only costs, right? Because you got they've onboarding fees and operational costs because they expect volume, right? They're not gonna work with someone who has 3 or 4 loans on their portfolio. They're gonna want to see volume.
And there's track record too.
Track record, yeah. Oh, you've been investing in trustees this entire time. Well, I'm not really going to talk to you because, well, you're not actively underwriting the loans. You're not originating the loans. You're just trusted investor. So that's also another reason why trustee or co-lender is kind of not really a thing anymore because of the activity that's available in the secondary. So, but at the same time, if you're an investor, like, and you want to learn, if you're an investor and you're seeing the industry and you're like, oh, I want to build my own private lending industry myself. I'm an entrepreneur. I think the best way to do it is to kind of like invest like that, because then you're going to see the spot. You're going to work with the sponsor or originator and see how they, trade loans and compare notes. And I've even seen that situation where, and then they partner together, right? And so and then the broker or the originator and then this investor will partner together, and then they'll stand up a fund. I've seen that happen a lot too. So
yeah. So what's
yeah.
interesting is another thing you keep in mind is the borrower pays for the costs. Everything
Yes.
it has. So as a lender, right, you want to have an attorney that specializes in this field. That's why we like to work with you, because these transactions, they can get a little tricky.
They're very tricky. Yeah.
So we like to engage with a full service legal firm to help give us guidance. And so that's one thing. So basically, if you're looking for a law firm, if you want to just make your own private loan, or you guys are one of the premier shops. So like, are you the largest one?
I mean, so that's based off of what we understand of the marketplace. I think we are the largest law firm that is exclusively dedicated to the industry. There are a lot of law firms that kind of like, for example, the big, Am 100 law firms, they have desks that service the industry, but they're not dedicated to it, obviously. And so we're the largest of the firms that are dedicated to the space, because the way we're structured, my department, the corporate and securities team, about 95% of the service is to the industry. But we have a banking and finance team that's much larger than my team, and they are closing hundreds of loans, if not thousands of loans a month, and they're all this industry's loans, right? And for all the household names, and also all lenders of all shapes and sizes, originators of all shapes and sizes across the country. And the one thing that rings true when I work with them and I talk to them about these things is you can't think of, and this happens a lot with our people who come from the conventional world. You can't think that these general Fannie Freddie docs or these really loosey-goosey docs the title gives you from a loan doc standpoint are going to protect you. And there's so much nuance to making these business purpose loans, because at the end of the day, they are secure residential. And so you have to jump through a few hoops to make sure that you've done this loan right. Otherwise, what happens? Now you've done the loan. Now you've done otherwise you've done a consumer loan without a license in a lot of states. You haven't complied with CFPB, all because you haven't jumped through the necessary hoops, and you want to move quickly and you think you can just fund it, right? Oh, it's a business loan. I don't need to think about any kind of compliance, right? Absolutely not. And so what's been great, though, is that the industry has really grown up, right? And we've been part of that story, kind of informing the industry and setting industry standards and best practices. Thankfully, nowadays, it's no longer like we no longer get the question, about, I don't care because it's a business loan kind of comment. Like, we don't get that comment anymore, but we are still seeing a lot of corners being cut by new market entries, thinking like, oh yeah, I mean, it's a commercial deal. I know this guy, I can go after the property in a heartbeat, and I don't mind, saving a few bucks and using docs that title provides, right? And I get that a lot especially in the new market entries. And I was kind of like, I don't laugh. I actually talk to them seriously. Like, you have to understand, title is not serving your best interest. Title is looking out for themselves. So they're not going to help you here. They're literally just giving you documents to get you off their back, right? And so, if the worse the loan docs are, the better argument they have to not cover. So I'm really nervous when I hear that. Like, I've seen the worst. Like, they're literally 2-paragraph loan document set for a fix and flip deal. I'm like, well, guys, think of this. This is your money, right? This is your money on the line. This is the borrower who you've got a personal relationship with. Do you want to make sure that you're doing it the right way? And yeah, you have to have a little bit of pain, but comparatively speaking, it's a pretty quick transaction. You're not dealing with like a 3-month underwrite like you would with a bank, but the documents are longer, but they're there to protect you and each other, really. So, and they're well thought out, right? And we've thought through all the issues. So when we deal with a client here at the closing table, like, we're helping them through that. We'll spot the issues for them too. Like, we'll help spot the issues. We see corporate issues. We'll tell the client this needs to be fixed. We'll help them understand how title works. We'll help them understand oh, I'm not even sure if this loan is, if I can even do this loan, because is this even business purpose? Can I do this type of loan in this state? Not every state's the same, right? Some states don't care about owner occupied. Some states do. Some states have different licensing rules. Sometimes states have hidden penalties for different rules. So it's all different, right? And so lately, especially, a lot of clients are lending in multiple states. And so it's important to think through the complexities of this industry. And so, a lot of folks think it's like, oh yeah, I can do it without any, they see someone else out there doing it without any additional consideration, and it looks so easy. And then we get on a phone call and we walk them through all the stuff they need to go through. And at first it's like, oh, it's a sticker shock, right? But on the flip side, what's been changing is the industries like largest players and institutional players are starting to standard as well. And they're saying, no, this is how you have to do it. And a lot of it has to do with kind of like, the credit criteria, but also the documentation. So
that's very interesting. I remember we ran into something in the state of Ohio for the SCR loan regarding prepayment penalties.
Exactly.
And you helped us because we didn't know. We thought, okay, it's a 5, 4, 3, 2, 1, a 5-year, but that wasn't allowed.
Nope. Yep.
You caught it. It really.
It's in Illinois, right? A lot of Illinois has really weird advanced fee rules, and every state has these weird nuances. Even if you don't need a license, a lot of folks are, oh yeah, I'm good on licensing. That's fine. No. Licensing is the tip of the iceberg. There's so much more to that. Like, for example, like Tennessee. I always use Tennessee as an example because Tennessee is the worst, right? They have a usury cap, but they don't have a licensing requirement for business purpose. But they have a usury cap.
Oh.
Right. And so like it's one of those things, like, and their usury cap is very low. It's like 7%. Well, what do I do? Thankfully, we've gone through it. This is how you do it, right? You can borrow out of state law, blah, 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 right? But there every state, like you said, Ohio has their weird rules, Texas has its weird rules, Florida has this weird rule. Every state has their own little nuances, so it's so important to make sure that you're working with an expert, not just on the docs, but also just in general, have that relationship with them. And we're one of the many, one of many groups, but I feel like we are the largest, and we have been around, and I feel like, the longest when it comes to this industry. So
yeah, I heard advice, things that you do not be cheap on. It's CPAs and lawyers.
Yeah. Agreed.
You can easily cut corners on the PPM, but we're gonna do it right. And keep in mind, as a lender, the borrower pays the legal fees. You pass them off to the borrower.
Exactly. And I understand these days being competitive, right? Having to be competitive and making sure that you're not overcharging the borrower, because today it's very competitive and they can go elsewhere. I understand that. But we're sensitive to that. We've built, and that's why our doc platform exists, right? Lightning Docs, right? That's why that exists. But one of the things that I always tell people, like, it's a little bit of extra money now will save you a ton of money in the future. We've seen it, man. We saw it in 08 and 09. That's when we got started, and we saw it during COVID, and we saw it, so a lot of lessons learned, and folks that have really invested in their business by having really good vendors, and not just us, right? There's so many other great resources out there. Having those vendors in their back pocket has served them well.
Yeah, and another thing that's important too is having a pulse on the market. So, we had really nice discussions from just to hear what's going on, because let's face it, this industry, the information is not public. No. So where do you get it from? You get it from people that are in the trenches, that actually in this business. So Kevin's amazing. He tells us what he's seeing, this and that, to give us guidance, and it really helps. That's another important thing for us, at least, is that it's the relationships that you have that help you in this business.
And honestly, like, that's a new phenomenon for us. It's probably past 5-6 years now. We haven't, we went from regional to national, and what's been really great is we've become kind of one of the folks, one of the folks that are involved heavily in this space. And so, like, initially it became like almost anecdotal, just hearing it from people. And then lately, we've been sharing notes with people a lot, and all types. What I love is I get to kind of hear it at various levels, right? And so, like, I'll talk to my clients who are at the retail level, direct to the borrower, and those folks they have one perspective, and then I have the aggregator's perspective, and then I have the vendor's perspectives, and then I have the institutional guys' perspectives, and kind of get a feel for things. And what's really interesting is how different they are, and how how optimistic some folks are compared to others, right? And so it's that's what's really cool. And I try to be as and that's why at our conferences too, like we've been switching over to more like industry kind of trends or state of the market kind of conversations, because everyone's a little nervous right now, right? And so I think they just announced the first negative what do you call it, GDP shrinkage, right? First time in a long time, first quarter. So everyone's kind of nervous, right? Rates are kind of being weird. The real estate market's kind of being weird, so everyone's a little bit nervous, and we're getting nervous, and we don't want to get caught with our pants down, right? So and I think what helped, where we saw that really come to fruition was during the height of COVID. So like when in March and April of 2020, I remember like Nima, myself, Anthony, and a lot of our more senior attorneys were just literally on the phone all day talking to our clients to make sure that we understood what their pain points were, but we're also relaying intel that we're receiving from others so they can make decisions on their business. And it was a really, really stressful time, but it was also a great time for us to really get an insight into some of our clients' kind of perspectives on things, and that informed us a lot too. So,
yeah, and actually that's interesting. I remember that was a very, very scary time. My wife and I just got back from Vegas. We went to the 10X conference, came back, and the world's coming to an end. I was like, oh my God.
Yeah.
It was very scary. But actually, I like to look at that as something to use as a case study, right? To see how things react. Because you're absolutely right. Like I always think far ahead. I like to forward look and always figure out ways like if this happens, this is like I always try to think of the worst case scenario and then how to prepare for it. That's just my way of thinking. Yeah. But what's really nice is that you're there to help us, guide us through that, because you really need someone in the space like an attorney like Kevin that can help with the business plan now and then how to get to the next level. And everything's about mitigating risk, right? Yeah. That's the whole idea. And so we're getting close to an end. So do you have any tidbits of what do you think like right now is, we know rates are rising, the Fed's very hawkish, and like, but what do you see right now in your opinion of the real estate market and for lenders right now?
It's kind of strange because we see a pretty big dichotomy. Industry specific economists have been telling me, we're probably going to be seeing a light recession. We're probably going to be seeing some significant rate increase and volatility in mortgage rates. But because of and they constantly stress the inventory shortage as kind of the counterbalance, right? And so I guess, after hearing their perspectives, but also hearing other perspectives, like other folks are, crying, more Wall Street type analysts and projections are like crying for doom and gloom and saying the world's going to come to an end. Or, one guy, I forget his name, was saying this is going to be the worst recession ever. I'm like, I think that's a bit much of a bit of a reach. I think from our perspective, it's time to be a little cautious, time to tighten up, get ready. I think I tell everyone, and this was indicative. I was on a panel probably 2 months ago, and we had all the aggregators up there, and they were all saying the same thing. Don't get ready, guys. Don't fight us on rates. And so that was kind of the initial inkling of what was coming. But I think as we're seeing the results today, I think I tell clients, like, I think you should start preparing, if you're a lender at least, start preparing for some rate volatility, maybe some challenges on. I mean, we've already had that kind of challenge on DSCR. It's starting to get a little more clear, but still kind of smoky. And so DSCR rates are going to be challenging because they're coming up. It's just the reality of things. Right? I think we're going to be back by the end of this year, maybe early next. We'll probably be in the 6s or 7s, right? So, that's going to be challenging. But when it comes to the other asset classes, fix and flip, construction, bridge, there are going to be opportunities, but be ready for tightening of belts when it comes to the institutional aggregation. Boxes are going to shrink, tighten up, spreads may shrink, MLPAs are going to be tightened up, less flexibility on MLPA negotiation. So a lot of that's going to come our way, I think. And that's natural because while these investors, these aggregators have learned their lesson from 2020 and gotten more committed capital, they also have to mitigate their risk. And they have to mitigate their risk, but they also have to figure out are they going to get these loans onto the securitization and get them rated. So when cost of capital goes up, they have to be mindful of that. So I tell clients, if you're relying on the secondary market, be thoughtful about that. Get ready for that. You may want to start thinking about building your own balance sheet because, while it's not going to be as sudden like 2020 because it's not COVID or a pandemic, you're going to start seeing some challenges come your way. So it's probably a good idea to start thinking about a little more of a conservative play, a little more of an old school strategy. And this industry borrows from the commercial world. And so look to the commercial world for some ideas. A fund is a great idea. And I'm biased, but it's a great idea. And those clients did very well during 2020. But also other kinds of balance sheet strategies. And then also one of the other things I would tell people is to look out for is, look at other asset classes that are kind of tangential, that may be interesting opportunities. So like, for example, multi, a lot of folks are now starting to add multi to the book, not your DSCR, like sub 10 unit multi, real multi, right? And because of the fact that there's so much inventory of multifamily being built, there's so much of it being invested in, some of it's trading hands. And there is a large institutional space for that. The Fannie Freddie DUS programs, the small balance programs. There's a lot of that out there. You can broker to it. You can sell to it. You can be the bridge to it. So there's a lot of it out there. I think multi is a vertical that people should be taking seriously. And then when it comes to I guess business practices right now, what I've noticed is there's still a lot of froth when it comes to interest in M&A. And so if you are positioning yourself for sale or you're thinking about sale, I would say, do it soon than later. If you're the seller, if you're the buyer, may want to reevaluate your valuations because it's not gonna be 2021 all over again, right? So 2021 was a big party. 2022, I think it's going to be one of those chill parties that we're all drinking beer. So which is fine. Yeah. The industry is going to survive. We're going to do just fine. Everyone's going to be healthy in the long run, but it just requires a little bit of extra discipline this year, I think. So.
Wow. Thank you so much. Actually, the M&A, there was a acquisition. Redwood bought, drawing a blank on the company.
Riverbend. Yeah. Yesterday. Yeah.
That was interesting. So there's a lot of that going on. And
a lot of folks are commenting. I'm Kevin. I kind of want to think about selling my business, right? So
that's how you make money. It's the exit.
It's a great way to not only make money, but it's also a great way to grow your business, right? You get that big capital infusion. It's great. Just be cognizant. If you're going to do it now, because that's the attitudes might change by this time next year. So
interesting. So anyways, there you have it, Kevin Kim. Thank you so much.
My pleasure, buddy. My pleasure. I love doing this kind of stuff, and thank you for having me on. And I wish you guys the best. I know it's the last day of the month, so closings are going to be a rough one today, I'm sure. So,
it's and it's not like how it is. A lot of review, but and how can people find you?
Yeah, everywhere. I mean, so I'm on Instagram. We have a website, GeraciLLP.com. We're on Facebook. We're on YouTube. We've got our podcast. So, the podcast is on streaming platforms. This podcast is called Lender Lounge with Kevin Kim. So, we're all over. I think my marketing team is making a big push to throw us on TikTok. So we're going to be everywhere. We're coming. But right now, our website is the best place to go, GeraciLLP.com. And look out for us there. And there's links to the law firm, links to the conference line, links to the podcast. So all of our verticals are there, and you can find out more about us. And of course, you can always reach out to me. Yeah. I could always help out. And the way you contact us, my partner Tei and I, LevineCapital.com. You can always call me on my cell. We're there, and we're building up this channel. So Kevin, thank you so much. And please like, subscribe, leave comments down below. Let us know for next time we have Kevin on, questions that you have for him, because he's a wealth of knowledge, and we're just so humbled. And thank you so much for being on here.
Until next time, happy investing, everybody. Thank you.
Thank you very much, Adam.